Hey, good morning traders. It's Monday morning. I'd like to go ahead and get started with our weekly zones. That's the first thing we'll talk about. All of the levels that, critical levels that we believe the markets will hold inside of over the next 5 trading days. We'll talk about a couple of new trades that we put on this morning. One that we're looking at adding to maybe today. And then finally we'll recap with some new stuff that I'm looking at. Okay, let's get right to the weekly zones. We've got the S&P 500 futures up first. So we've got upper level 2185, lower level 2057. So if you're going to put any of these strangles on for the week, red areas are where you want to hedge your positions at. Alright, next up is the ZBs, 30-year Treasury bond futures, and we have upper level 166.07, lower level 159.28. Treasury bonds and crude still continues to be our most volatile trading vehicles that we watch. Volatile through the week in relation to the first levels that they violate all the time. So, well, not all the time. You know, statistically these two markets probe those two areas right there more than any of the other markets we follow. Second levels holding right in line with all the other markets, but boy, crude and ZBs, man, they pierce that first level quite a bit. You see the bonds have really been adhering to this lower descending channel that we have here. So would not surprise me a bit to see this thing come down tag here. We're definitely due for a rally in the bond market, so you know, maybe a little bit more to the downside, just a bit, and you know, would not surprise me a bit to see this thing take off a little bit to the upside, especially if we continue being soft in the stock market. Crude right now to me looks like it's winding up for a move one way or the other. So according to Sentiment Trader, the hedgers in crude have a very, very large short position built. And I know these things don't turn on a dime. These hedgers continually build positions over time, but they're net short this in a big way. So you know, if I didn't know that, I would venture to say that crude looks like it might want to run higher. That's the way I would lean, but my years of watching how these hedgers position themselves and posture for potential moves, yeah, I really don't want to bet against those guys. Anyway, we've got we just keep playing our non-directional trades, guys. That's what's working. That's what makes the consistent money for us. So if you take any directional trades in crude, just be very, very careful. Alright, here's the dollar. Dollar had a really nice run up after the tight consolidation area that it went through. So we had just a huge move up over the last 2 weeks. But here we've got levels at 99.58 and 96.31. So those levels should hold to the upside and the downside for the week. Last but not least is gold. So gold is kind of drifting down. You know, just a trickle down after the complete amputation without any anesthetics. That kind of a drop right there that just squashed everybody who was long the gold market. But for the week, looks like we have levels at the 1294, 1214 area. Alright, let's see what else we have up next here. Okay, we're going to put a new trade on this morning. Well, we actually already have put the new trade on. Let me get the screenshot here set for you. There we go. And let's make that a little bit easier for you to see. Alright, there we go. Okay, so what we've got is we put a new trade on in crude this morning in the double it up portfolio. So this is just to refresh you. This is the portfolio where I'm intentionally showing you the money management algorithm to use to trade Iron Condors or Strangles, so that if you want to double your account, this is how you would do it. It's how you go about it. It's not luck. It's not any of that. It's just a game of math. So, but what you have to be wary of whenever you're trying to double your account is it's just a matter of when, not if, but when you get that big drawdown. And when I mean big drawdown, every time I've doubled my account and intentionally gone after that, I've never ever done it unless I've experienced a 50% drawdown. So that's been kind of the norm for me trading these non-directional strategies. That's happened to me several times in my attempt, and successful attempts to double my portfolio. So always had 50% drawdowns. We haven't had that yet in this account, but it's coming. It's just a matter of time. So it's just statistics, that's all it is. But anyway, here's the worksheet that we use to keep us on track. So we started this portfolio with $25,000 on August 15th. Now we have $32,694. So what this money management algorithm does, it has no idea where you started from. We get to decide on a couple of inputs what our annual return is that we're looking for. So this money management algorithm will continually, every time you update it, it looks forward 12 months and gives you the calculation so that you can try and double your portfolio in the next 12 months. Now what this does for you is, again, it has no idea when we started. So we started August 15th. We're not continually trading with a $25,000 amount right here. We adjust our portfolio every time we put a new trade on. So if we're up money, hey, this algorithm thinks that you want to double the amount you just put in there over the next 12 months. So what this does, this has a compounding effect to our strategy. So we may have started out, only needing to make $1,800, $1,900 a month to double our portfolio, but now it's looking at larger sums, thinking that, hey, 12 months from now, you want to double this amount. So this is just the benefit of the algorithm. It looks forward. It intentionally tries to grow that account at a much faster clip than what you actually set out to do. That's all this does for us. It just keeps us on track. So anyway, right now we're looking, we have to collect $4,540 in order to meet our monthly objective, which is $27.24. That's how much we need to make over the next 20 trading days in order to stay on track. So we collect $4,540, and our profit target is 50% of max profit. So just to make sure, that's how this algorithm works. We input our portfolio size, we plug in what our annual return is that we're looking for, and well, I think I can capture 60% of the monthly theta. So I'm aggressive in that respect too. We know that by trading these Iron Condors and Strangles, the sweet spot is around 50% of max profit. That's why they're higher probabilities trades, is that we go in there and we choose a profit target instead of trying to let these things go to max profit. So, but I think I can do a little bit better than 50%. That's what I'm shooting for. So anyway, that's how the math works. So today, told me I needed to sell around 15 contracts with the IV the way it is in the crude market. Crude IV's around 37, I believe it was, when I put this trade on this morning. So oh, you know what, I did not update that, so I think that's 26. Yeah, so we're using roughly 79% of our buying power. That's aggressive as well. 50 to 75% is of your account size is very, very aggressive. Now let me say one other thing. This is another way of looking at this trade right here. So I'm going to use this space just to introduce this concept, and I'll talk more about it later. Just because I'm trying to double, say I'm doubling this account, you don't have to, it doesn't necessarily have to be your entire account. You could take this strategy and this market, and let's say you've got a $200,000 account, and that you want to allocate $50,000 out of that account to trade this strategy, this underlying, with this money management algorithm. So out of your $200,000 account, you come in here and you treat this $50,000 like it's a separate account unto itself, and you trade this algorithm with the intentions of trying to double that portion. So that's one way of looking at this whole concept of how to double your money. So it can be your entire account, or it can be a portion of it. So just think about that as you're working through your own portfolio and how you diversify some of your trades. Alright, so let's take a look at the actual trade template. Here's what we put on this morning. Of course, center line is the price. We put the trade on today. Crude market, Iron Condor, 59 days to go. Here are the trade mechanics, how the trade structure. Alright, we have an 80% probability of success. IV this morning was 37%. This is what we collected. Our max loss, 25,000. You'll notice here this is a little bit less than what we're normally getting in the crude market. So, you know, we're down into the mid to upper 37s in the IV. We've been trading crude into the 40s. So IV's dropped a little bit in crude market. Alright, all total we have 60 contracts on. Hedging. This is on the put side and call side. That's when we're going to reassess. Alright. When we reassess, our first course of action is to add a trade from the untested side. Our second course of action is to roll the untested side. Third course of action is roll the tested side. And fourth course of action is to add a butterfly. So those are the tools that we have. I just want to list those. I never know exactly what action I'm going to take when we get to one of our hedging points or a strategy adjustment point, whatever you want to call it. I just want to have all the tools listed to remind me of everything to look at once we get there. So that should be the mechanics. I'd like to tell you that we're going to add a butterfly every time, but that may not be the best thing to do. We have to take into consideration how quick it gets to one of those action points. Hey, we may be in the trade long enough to where when it gets to an action point, we still have a profit. So, you know, another course of action may be we do nothing. We just let the trade roll. So anyway, it's just a reminder of all the things that we have available in our toolkit to keep this strategy going. Okay, while we put the trade on, hey, this is just part of the strategy. We rinse and repeat. We take a profitable trade off, or we close the trade out and we put another one on. So we have 59 days to expiration. So we just put this on this morning, and that's it on the new trade. Now I have, let me see if the S&P trade is, take a look on the other screen I have up. No, the S&P trade has not kicked in yet. Market's trying to firm up a little bit, so that's taking away from the credit. So we haven't gotten into the S&P trade yet, but I have that queued up. Let's see, what else do we have here? I wanted to show you. Oh, yeah, some new stuff. Let me take care of this right quick. Alright, I wanted to show you there we go. what I wanted to show you is I had my little pullback system finally coded in the toss so that it spits out the entry points. Excuse me. So what you see here is entry 1, 2, and 3. Entry 1, 2, and 3. These things are automatically plotted. And see, we just had one here recently right there. There's a couple of glitches. This one right here, once I get it fine-tuned, this entry would never show up. But that's, you see that entry right there about once every 50 or so signals. Yeah, it's nothing really to worry about. But you can see it really picks up the entry points. This is exactly what I'm looking at. And all I want to highlight is there may be more than 3 signals. There actually are in this trade. But the first 3 are the only ones I'm really interested in looking at. The only ones I'm really interested in making a play for. If I haven't made my play inside the trend with the first 3 entries, then I'm not going to try that. This is the one I really want to get in on, is that first one. It has the highest probability of success. So it follows the trend really nicely. And what I don't have showing here is my filter. So this is part 1 to coding my entry system. These are the raw signals. I do not have my filter. My filter would eliminate, especially a trade like this, would probably eliminate this first one right here, so that you would have these 2, and this would be a third one right there. But anyway, kind of neat. Just wanted to show you that right there. I'll keep working on it, and maybe another month or so have it completely finished, so it's fully automated. Alright, that's it for the new stuff. I think that's it for the weekly zones. We've covered the new trade. I think that's a wrap for Monday morning. So hey, have a good trading week, and I will talk to you later. BA out.